Well, I look at all these assets and the real question is there something better? There has to be something better. Like what would make me sell Apple stock? Well, if you had a better mobile network, what would make you get negative on Amazon? Well, if there was a better retail network. What makes you get short Google? If there's a better information network. If there's something better, otherwise, and I don't see anything better because
could Ether be better?
No, because Ether is much more complicated. It's much less mature. It is not it's not a $1 trillion monetary network that's purpose built to be a store of value. Ether is attempted to be many other things, including the world computer and a smart contract platform. And it's going through a very rapid evolution technical cycle. So as it goes from Ether 1.0 to Ether 2.0, the entire basis of the network is going to change from proof of work to proof of stake. That introduces a whole host of questions. And so it'll be 3 to 5 years, probably 5 years after the Ether 2.0 upgrade before you can evaluate what it is. If you're a hardcore institutional investor, it's a different thing. I think that if you want to characterize crypto universe, you have one thing, Bitcoin, which is the dominant $1 trillion crypto asset network. It's in essence, if God created gold in cyberspace, he would have created Bitcoin. It's gold in cyberspace, but it's got none of the liabilities and defects of gold. It's an encrypted block of sunlight. You can move it at the speed of light. You can program it with 1 million transactions a second. You can use it as the base layer for the 21st century economy. It's completely transparent. You can't make any more of it. It's capped at 21 million. You can take delivery of $1 billion of it in the palm of your hand or hold it in your head. Okay, so never in the history of the world did we have such a pure form of monetary energy.
Should I be concerned that in theory, in their own way, governments could shut it down? How about too many miners in China, hash power, all some things that people bring up as potential challenges?
Well, once you understand it, you start with the observation that it's the most successful digital network in the history of the world, okay? It went from 0 to $1 trillion in 12 years. Google took 22 years, okay? Amazon took 24 years. Apple took 42 years. Microsoft took 44 years, right? So this is the most successful thing ever unleashed in the history of humanity from an economic point of view. So then the thought is, well, it seems like it's too good to be true. It's that good. Okay, well, will it be banned? Will it be copied? Will it be hacked? That's the question. In
Right.
12 years, it's never been hacked. Right? It's been tried a gazillion times. No one managed to hack the underlying blockchain. It's the most secure database network on Earth ever invented, primarily because it is this decentralized network of SHA-256 ASIC miners. And
I was just going to mention that.
it's billions and billions of dollars of hardware, and the only use of the hardware is to secure the network. So it just can't be attacked in a conventional way. You would have to spend 4 years and $20 billion to attack the tip of it. And there's hundreds of millions of people that know you're not going to keep that secret for more than a few seconds before the community attacks back.
Since Bitcoin blockchain is a dominant digital monetary network, will applications eventually be built on the Omni layer that fosters innovation in NFTs, igniting the Bitcoin blockchain to become the underpinnings of the Internet of Value?
I think there'll be an explosion of all sorts of layer 2 solutions. They're already there. Coinbase is a layer 2 solution. Binance is a layer 2 solution. Square and PayPal are layer 2 solutions. Grayscale is a layer 2 solution. Every company that ever plugged their product or service or mobile app into Bitcoin is a layer 2, and they're all facilitating millions of transactions a day on the layer 2, and then they're using the base layer as the underlying settlement layer. there are probably 10,000 companies that are plugged into it a big way. There'll be hundreds of thousands. There'll be billions of transactions in these layer 2 networks that ultimately will be settled on the layer 1 network, or they'll use the underlying blockchain as the fundamental store of value and integrity of the network. The nature of money has been bifurcated, and now the medium of exchange portion of money is sitting in fiat currencies, and the store of value element of money is now migrating into crypto assets and into Bitcoin in specific. So everything you'd study in finance is going to be rendered largely irrelevant in the next 10 years unless you really grasp the underlying theory of money. I think that the best way to learn that is probably not in school at all. The truth is, you probably should go on YouTube, and you should, if you go to hope.com or the like, you'll find an entire set of videos on this. You can learn anything in YouTube. A lot of university courses are 10, 20, 30, 40 years behind the times, and there's a lot of inertia in them. But if I told you that somebody invented something 10 years ago that obsolesced 50 to 90% of the finance industry in the last decade, you would say, what is that thing? Inflation is a vector, which means that I can track the inflation rate of houses. It's 11% this year. I can track the inflation rate of luxury houses in Palm Beach and beachfront property. That's somewhere between, it's 25% in Palm Beach, it's 50% in the Hamptons. I can track the inflation rate of assets like shares of stock or bonds. The inflation rate of the S&P is 39%. So people tell themselves, oh, that's not inflation, that's return. This year, you had hyperinflation in assets, you had no inflation in consumer goods. But rich people tell themselves, I'm a genius, I bought assets that went up 39%. and those consumer goods didn't. Okay, you're captured in your own frame of reference. I can define any market basket of aspirational goods, products, and assets. Once you embrace that idea, then the question is, do you want to live in your parents' basement, watch Netflix, and order Domino's pizza the rest of your life? If so, the CPI is relevant to you. Or would you like to be wealthy or stay wealthy? If you wish to be wealthy or stay wealthy, then the relevant inflation rate is the asset inflation rate. And the best surrogate for the asset inflation rate is either the broad money supply, M2, which expanded 25% this year, or it's the S&P index, which is the most liquid thing.